So guys, today we are going to take a deep dive in market structure. I'm going to tell you guys about the 3 types of market structure that we have and how to trade each and every one of them. So just before we get in this exciting video, go ahead and drop a like on today's video, man. It is totally appreciated. And subscribe to the YouTube channel if you want more informative videos like this. So without further ado, let's get right into it. So we have 3 types of market, right? So let's get that jotted down. 3 types of market. Okay, so that's 3 types of market that we have, right? We're gonna take a look at the first one. So put that there. And the first type of market structure that we have is a market that is in an uptrend. So I'm going to show you guys what that structure looks like. In an uptrend, we have a market that makes higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and so on, right? Let's end it right there. And that should be that. So excuse my drawing, guys, but that is what an uptrend looks like. So let's label it real quick so you guys can get the grasp of what I'm trying to communicate here. So we have a market that makes higher highs. So the HH means higher high, and we have a market that makes higher lows. HL. So HL for higher lows, HH for higher highs. So what you'll realize is that this market is basically trending up. Each time this market is creating a higher high and it's creating a higher lows, you realize the higher lows are getting higher. So that is what an uptrend looks like. So each time it's making a higher high right there and continuing up and onward. And each time the higher lows are getting higher. And that is what an uptrend looks like. So the second type of market structure that we have is a market that is in a downtrend. So let's take a look at that quickly. And in a downtrend, we have a market that makes lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, and lower lows, and so on. So let's label that as also. Let's borrow this. And let's relabel this. So that's a lower high. And this right here is a lower low. So let's borrow all these right here. Just like that. Nice and easy.
Yeah, boy.
And let's make it quite simple. So we're going to relabel uptrend. This over here is a downtrend. So with the downtrending market, guys, you will simply see that we have the market making lower lows and lower highs, lower lows, lower highs, lower lows, lower highs, and so on. So you realize the highs are getting lower each time and the lows are getting lower. So it's quite the opposite of an uptrend, guys. So these are the main types of trending markets that we have, the only types of trending markets that we have. Now we are going to take a look at the third type of market structure. So another market structure that we have, another form that the market can show up in, is a consolidating market. So let's label that real quickly. Let's show you what that is before we label. So we have a market that is ranging basically.
What?
So a consolidating market is a market that is ranging. There's no clear structure and it's quite confusing if you ask me. And I will never suggest that you guys trade this type of market. So otherwise it is known as a market that is moving sideways. There's no clear structure as you can see. And it is ranging between these areas right here. I'm going to demonstrate what this is later down in the future videos, but it is basically ranging between a support and resistance areas. So these are the three main types of market structure that we have, and let's go over it real quickly. So we have the market that is in an uptrend, clearly making higher highs and higher lows, higher highs, higher lows, higher highs, and higher lows. Each time the highs are getting higher and the lows are getting higher, and it's climbing up, guys. Let's just say this market is climbing up. It's a good time to buy in this market. And we also have a market that is in a downtrend, and this market is actually falling. This market makes lower highs and lower lows. Each time the lower highs are getting lower and the lows are getting lower. And that is what a downtrend actually is. In a consolidating market, there is no clear structure. As you can see, guys, there's actually no way you can see a higher high and you can't see a lower low or anything like that. Now, you guys may be wondering if a market can actually change from an uptrend to a downtrend. Well, yes, it actually can. And I'm going to show you guys how a market can change from an uptrend to a downtrend, and how a downtrend can change from a downtrend to an uptrend. So we always take note of the last higher low in an uptrend and the last higher high to see where the market will break. So if the market does something like this, it broke structure right there. So once the market passes this higher low right here and closes below, it is a break of structure. We call that a break of structure. So let's write that down quickly so that you guys never miss that point. So we call this a break of structure, BOS. So break of structure, BOS for break of structure. And we usually draw a line to mark the last higher low. And here, market has broken this area. We'll put, let's highlight this area right here. This is where the breaker structure took place, and market will do something like this. So once market breaks structure, it has created a lower low now. So remember, market will do something like this. We'll come back to this area and then continue to the downside and start moving like the downtrend market that we were talking about earlier. So we were in an uptrend market earlier, a market that was trending up. Now we have broken the higher low, we have violated it, we have teared it down. And now this is a lower low and this is a lower high. So we have switched from an uptrend. Let's put an arrow here. Uptrend to a downtrend. Quite simple, nothing too complicated. I'm going to ensure that you guys get this so you all can dominate on the charts, man. So we have moved from an uptrend to a downtrend. Once we have the breaker structure, the market has created a lower low, and now we have the lower high, and market is continuing to the downside. So now we want to take also a look for a market that is actually trending. So we know we are in a downtrending market once the market is actually making lower highs and lower lows. Now I'm going to show you what can happen. So you guys remember we talked about the breaker structure. So if market does something like this, market comes, does something like that, we have broken structure here because we have violated the lower high. So as previously we talked about, in a downtrend, in an uptrend, we have to violate the higher low. But for a downtrend to change to an uptrend, we have to violate the last lower high. And market will do something like this, come back, and then start to continue in an uptrend. So that's simply how market does it. Quite easy if you ask me. So let's highlight what I did earlier here. We're going to have this here, and this is the last lower high. We run it across, and we get the breaker structure right here. So once we have breaking structure, the market has shifted. So now we're in an uptrend and we're making higher highs and higher lows. That should be that. So as we can, let's recap quickly. So we have the market was making lower highs and lower lows, and we said that if the market is doing that, it is in a downtrend. Now we have the market break structure, and it has broken or violated the last lower high, and now it has come back and it is making higher highs and higher lows. So just keep in mind, for a uptrend to change to a downtrend, we just have to have a break of the higher low, the last higher low, and we have the market will transition from there. As for a downtrend to an uptrend, we have to have a break of the last lower high, and then our market will transition into an uptrend. And that is it on market structure, guys. This is a simple breakdown. I didn't want to make this video too long, so make sure to tune into the next video, because on that video you never want to miss it. We're gonna dive onto the charts and how you can identify each market structure. This will help with your profitability, guys. You want to tune in. You never want to miss it. So just before you go ahead and drop a like on today's video, guys. It is totally free. And subscribe to the YouTube channel now if you want more awesome videos like this. And it was your boy, Nause. And I'll see you all in the next one.